Assalamualaikum warahmatullahi wabarakatuh. My name is Farah Aina binti Adamasi. I will present about what is Sharia audit. Sharia audit refers to the full process of unbiased critical review and analysis of all the policies and activities of a firm in conformity with the Islamic laws for business. It includes the regular and timely reviews undertaken to offer an unbiased opinion about the investment and policies of any company in light of Sharia standard. The purpose of the Sharia audit is to study and evaluate the organization operation and policies to make sure they adhere to the standard established by the Sharia Advisory Board for the audited product. To make sure the goods and services fully commit to the Sharia principle, a comprehensive review and examination must be conducted. The Sharia standard and regulation, as they may be set out by the Sharia Advisory Board or industry group such as AOIFI, serves as the fundamental foundation upon which the Sharia audit is founded. Is Sharia audit obligated? Yes, any business or group that want to keep selling items that are Sharia compliant must follow the rules set out by the Sharia. Who need a Sharia audit? Any organization that manage Sharia compliant goods, services, or finance must do a Sharia audit. According to the regulation established by the Advisory Board, in connection to the Sharia compliant product, the auditing or screening must be carried out on a regular basis.
Assalamualaikum and hi, I am Siti Nurul Fatimah Ismail, who is in charge in this team to present and share about the objective of the Sharia audit. The Sharia audit process is aimed at maintaining and increasing the trust level of stakeholders in relation to Sharia matters and assures them that the product is run in accordance with the Sharia principles that outlined in the initial Sharia compliance fatwa issued by the Sharia Advisory Board. The first objective is to ensure that all the activities and operation carried out by the organization do not conflict with established Sharia principles. Secondly, it also to assess design of control and effectiveness of the control. Next, it also to assess whether the operations are in place or the controls are being followed through in accordance with Sharia compliance. And lastly, the objective is to provide independent, reasonable assurance on compliance with Sharia requirements.
Assalamualaikum warahmatullahi wabarakatuh. I am Siti Nurul Farah binti Ismail. I will conduct to present about why Sharia audit is compliant. According to the Accounting and Auditing Association for Islamic Financial Institution (IFI), means that compliance with Islamic Sharia rules and principles reflected in the fatwa ruling and guidelines issued by them. Since we have Islamic banking system, Sharia complying is required. Not only that, to distinguish the Islamic financial system from the conventional financial system. The next reason is to boost public confidence or perception of the stakeholder. And the last one is to ensure the acceptance, validity, and enforceability of contract from a Sharia point of view. The main differences between Sharia and conventional audit can be focused on party relationships, which are for the conventional audit include entity, auditors, and user, while for Sharia audit includes entity, auditor, and broader range of users. Conventional audit focus on financial statement accession and the basis is based on the IFRS reporting. Contrast to Sharia audit that focus more on financial statement as well as processes, contract, personnel, system, and performance. We look at sufficient evidence. The conventional audit obtained through documented physical observation, sampling, recomputation, analytical review, witness report, and survey, while for Sharia audit is through SSB ruling. fatwa of international and national fiqh board, and all other conventional evidence. The last one is the written assurance report. The auditor prepares a standard audit report. For conventional auditor, the auditor prepares a standard audit report, and the Sharia auditor issued a more comprehensive report.
There are 6 steps in audit Sharia process. Firstly, the fund structure and initial Sharia compliance certificate is obtained. Next, a comprehensive list of documents and supporting details are requested from the client. Thirdly, a review of the submitted audit information is studied. In this process, it involves verifying information including market information. After that, a comprehensive report is submitted to the Sharia committee. As the comprehensive report had been submitted to the Sharia committee, the Sharia committee will review the audit comments and may suggest the correction if any. And lastly, a Sharia audit fatwa is issued noting the deviation if any.
Hi and Assalamualaikum. My name is Sharifah Ala Shakina. I will continue our presentation with the Sharia audit services that are offered in Malaysia. First, Sharia audit are for listed securities, mutual funds, and equity funds. Sharia audit software which can continuously monitor the compliance of a Sharia equity fund in real time. The audit procedures incorporate verifying all trades, flagging non-permissible trades, monitoring whether non-permissible trades are closed within the grace period, monitoring changes in compliance of trades held, ensuring negative compliance changes are closed, and monitoring dividend purification ratios. Audit service can provide daily, weekly, monthly, quarterly, or semi-annual reports. Next, Sharia audit services are for hedge funds. Audit process which helps Sharia compliance hedge funds remain in continuous Sharia compliance. Sharia auditors have the experience of setting up and working with third-party administrators as well in order to audit Sharia compliant hedge funds. Third, Sharia audit also used in Islamic banking. Sharia audit denotes that a financial product or services or activities complies with the principle of Sharia. This means Islamic banking can manage clients' deposit to fund all economic activities unless there is a clear prohibition that it is non-permissible according to Islam. Sharia audit provides their expertise to Islamic bank managements in auditing their various banking products by helping them devise such processes and checks which help them remain in continuous Sharia compliance. Sharia audit also provide periodic Sharia board issued audit fatwas upon successful completion of an audit period. Besides, Sharia audit services are for REITs. REITs stand for Real Estate Investment Trust. They offer attractive yield relative to other yield-oriented securities. REITs that comply with Sharia are called I-REITs. Sharia audit analyze the product, monitor the process, and recommend improvements and prescribe the best practices to help REIT funds stay compliant. Fifth, Islamic insurance company. Islamic insurance companies need to ensure that policy holders' funds are held in accordance with Sharia principles. Sharia audit services can help Islamic insurers adhere the Sharia principles on a continuous basis. Next, Sharia audit service for bonds and sukuk. Sharia audit conducts periodic and annual audit for bonds and sukuks to ensure conformity of transaction with the provisions of the Master Sharia compliant fatwa issued to the sukuk. Other than that, for financial institutions, Sharia audit conduct extensive audits that run across the entire breadth of your services in a periodic manner and deliver an audit fatwa. Lastly, Sharia audit service that offered in Malaysia is for financial institution, converting from conventional to Sharia. Sharia Audit conducts special audits and monitoring services for organizations who wish to convert its existing conventional products to being Sharia compliant. The audit helps the organization have a smooth and hassle-free transition and assist them to remain compliant.
Back to me, I will continue to take turns in presenting about the lack of independence in Sharia auditing practitioners. It is one of the most critical issues that has arisen in Sharia auditing. As an internal Sharia auditor, they should be able to demonstrate that there are no threats to their independence to gain the trust of stakeholders. This is because Islamic Financial Institution (IFIs) stakeholders deem auditor to have integrity through the perceived independence of the Sharia auditors themselves, in appearance and in act. It is also suggested that Sharia audit are expected to be independent enough to give opinion on whether the IFIs being operated according to Sharia rules.
What is the current issue Sharia audit in industry? First case about Maybank Islamic Berhad versus Golden Base Construction. Golden Base Construction was incorporated on 16 May 2011 in Malaysia. Business includes to carry on in business as contractor and subcontractor of all kinds PF construction. Golden Base is private limited company and has been exist for 11 years. Maybank granted an Islamic Murabaha financing facility of 50 million to Golden Base Construction for the construction of a highway. The facility was secured by two individual guarantors. The financing was structured on the Sharia principle of Murabaha, whereby Golden Base made a request to Maybank to purchase underlying Sharia compliant commodities at a purchase price equivalent to the financing amount, and undertaken by Golden Base to purchase the same Murabaha assets from Maybank repairable on deferred payment terms. Golden Base and the guarantor default in repayments. Maybank commented a suit at the High Court. In their defense and counterclaim, Golden Base and the guarantor alleged inter alia that the financing is both unenforceable for business Sharia compliance and counterclaim for a sum of Rm 95.8 million for loss of profit and investment. At the High Court, Maybank application for summary judgment and stricken out of counterclaim were dismissed. The High Court found there were two tribal issues. The tribal issue were whether the Murabaha transaction complies with Bank Negara Malaysia Sharia guidelines and that the Murabaha assets has not been identified in the financing document. One of the pertinent issues highlighted by the High Court in dismissed the application for summary judgment by Maybank Islamic Bank Berhad in this case was that the mere use of the words Sharia compliance commodity determined by the bank as per the e-certificate in the financing document was insufficient to identify the underlying asset. Thus, the legality of the Murabaha transaction was in question due to the uncertainty of the underlying Murabaha asset. Next case is GRR Resources Sdn Berhad vs Kuwait Finance House Malaysia Berhad. KFH granted GRR various Islamic credit facilities, including 4 Ijarah Mutahiyah Bitalmik facilities. The facilities were the purpose of facilitating the leasing of ship by GRI from KPH and were guaranteed by 3 individual guarantors. Arising for GRI default in making monthly leasing payments under the facilities, KPH commenced legal procedure against GRI and the guarantors to recover the amounts owing under the facilities and obtain summary judgment against them for the sum of Rm 118 million together with compensation fees. There are some arguments between two parties. In the appeal to the Court of Appeal by GRI and the guarantors, GRI contended, amongst others, that Clause 2.8 of the Ijarah Facilities Agreement, which required it to undertake and bear the costs, charges and expenses of all major maintenance of the lease vessel was not Sharia compliant. JRR further submitted that the High Court have erred in not taking a ruling of this issue from the SAC portion to Section 50C of the CBMA. KPH contended that impugned provision do not vest any judicial power in the SAC. It argued that the SAC only has power to ascertain and rule on Sharia issue and present such ruling to the court. The SAC is submitted make no determination of the case at hand. That determination is left to the court to apply the SAC ruling to the facts of the case. The decision of the Federal Court had that section of 56 and 57 of the CBMA were constitutional and that the ruling by the SAC under section 57 did not conclude or settle the dispute between the parties arising from the Islamic financing facilities. The majority added that the SAC only ascertained Islamic law for the purpose of the Islamic financial business and did not determine the liability of the borrower under the facility. The determination of the borrower's liability under any facility was determined by the presiding judge and not the SAC.